Welcome investors, and thanks for joining us on your Investment Advisor channel, where we decipher the market so you can make actionable investment steps. I'm Jake Ackerman. Unfortunately, inflation data came in higher than expected. Interest rates tick up, bond prices come down. The stock market still rises and looks to be progress on the debt ceiling talk, or is that not what's really happening? Let's take a look under the hood and find out what's going on. So first off, let's take a look at PCE, specifically core PCE, the data point that the Fed talks about each and every one of their meetings. And for all of you at home, core PCE is the prices of goods and services folks spend minus food and energy, which are the most volatile indexes, most volatile data points. Now, the expectation was 0.3 month over month, and unfortunately, we've seen a 0.4. Now, what is that causing the actual economy to do? Well, it's causing interest rates to tick up. Let's take a quick look at interest rates. Interest rates flow back to the almost nearly the high levels of 2022, and that's going to put a damper on credit. I mean, it's going to make credit harder to obtain because interest rates are higher. It's going to hurt interest rates for your 30-year fixed mortgage, your 15-year mortgages, and that's going to make money supply tighter monetary policy. Now, with the higher inflation data point, what's that going to cause the Fed to do? Well, the Fed was kind of 50-50 down the line whether they were going to hike interest rates in June. They were leaning towards not hiking interest rates. But does this give them the cover to hike interest rates again? And that definitely may be the point that they needed to hike interest rates one more time. And if you looked at the interest rate that I just showed you, it was showing you that they're probably going to do that, or they may not have to do it because the interest rates or the market is ahead of the Fed actually having to do that. So they may not need to do it because the markets have already done it themselves. They've already made credit more difficult to obtain. Let's take a look at what the stock market's doing in the face of this. Stock market is on its way back up in the face of inflation, higher inflation data. The stock market is waving it off, putting it to the side, and it's still rallying. Tech companies are really rocketing, and that was probably due to NVIDIA's earnings this week. Anything AI, and it's tied to AI, has been booming this year. Do you want to hop on the train that's already left the station? Not necessarily. So patience on jumping in these big movers right now, and patience because the stock market is still rising in the face of higher inflation because of this. Let's take a look what's going on with the debt ceiling talks real quick. White House and GOP appear closer to a deal to avert the debt ceiling crisis. And that's more than likely what we're seeing is probably the reason the stock market is in the face of higher inflation. It's looking past this and it's looking at, oh my gosh, we might actually get a deal on this debt ceiling. It's all they've been talking about every single day, day in and day out, that we're going to default on the debt. But it appears that both the White House and the Congress, which is controlled by the GOP in the House, are going to reach a deal. So we're happy. We're back on the rally train. Now we are definitely getting close to some major points of resistance in the market. So I advise you to consult your financial professional, stick with your plan, and also, you know, if you've been in since October, if you've been in the early beginning of this year with some great companies, you know, now might be the time, if we actually do get this deal, debt ceiling deal, to lock in some of those high quality gains that we've had so far this year. And that's what we're most likely going to be doing here. Sometimes you heard an old saying, buy the rumor, sell the fact. The rumor is that we're going to get a deal on the debt ceiling. The fact is, do we actually get that deal? And we get a nice place that we can take some profits leading into that Fed meeting, which if things work out, the economy's looking good, you know, that might give them the cover to raise rates, or maybe they don't raise rates, but they still talk a really hawkish tone. And when I say hawkish, I mean tight monetary policy. So do they just, hey, we're not going to raise rates here, but we might do it next meeting, and that would still be par for the course. The bond market is looking at another rate hike. Does that happen in June? Does that happen in the subsequent meetings? That's definitely a possibility. So let's stay tuned. Let's see what happens. It's a long weekend, Memorial Day. The market's usually pretty slow, but we'll see if we get that deal, because the X date of the debt ceiling crisis of us defaulting their debt is probably going to happen next week. That's what Janet Yellen said, I apologize, the Secretary of Treasury. And that's what she's saying, hey, it could be June 1st, it could be June 2nd, June 3rd, but this deal's got to get done. So it's most likely we're looking for it as soon as the Congress resumes on Tuesday. Do they get it done before then over the weekend? It's a possibility, but they got to get it done next week. So we'll be talking about what that deal is and what's taking place and what does it mean for your investments. Expertise you deserve, experience you can count on. Jake Ackerman.